Okay, so what I want to talk to you about today is days like today. And days like today, if you look at this screen right here, I am down $1,501.57 on Robinhood. But the thing about it is if you're trading the way you should be trading, you're going to see days like this. You're going to see days like that. And to where, um, if you're trading right, you should be staying close to the 52-week low as possible. Every time you see a stock that you believe in, that you constantly trade, is nearing its 52-week low. Not saying every time it moves down $1 that you invest in it immediately, but what you do is you try to stay close to the 52-week low as possible. And the further, the closer you remain to that 52-week low of the stocks that you are trading at, the less money you can ever lose. See, if the stock's 52-week low is at say $22, and you're at $22.43, then you're in good shape. The problem occurs when you are losing money when you're at $29 buy-in on that stock, and that's at $22. Then you're at negative $9.43 a share. If it's at 20, it's like 29.43. Well, actually, it's negative 7.43, and it's at $22. If it's at 29.43 that your buy-in is at that stock, and that stock's 52-week low is at 22, you're negative 7.43 a share. And so you span that out over, 100 shares. If you have 100 shares and all 100 shares you're down $7.43, then you're down $743 just on that one share. So that's what a lot of people don't understand is that you have to stay close to the 52-week low as possible. And so, like I say, you look at some of these stocks that I've invested in, like say the first stock on this list is this company NSTG that has filed for bankruptcy in the last couple days. They filed for bankruptcy, and I'm down negative 288.99. Well, I invest in this stock because I believe it's going to turn around, much like Rite Aid. You invest in things that you believe in. They have 703 employees, and they're located in Seattle, Washington. And their 52-week low is 5 cents. It's 5 cents, but then there's a zero and a five after that, so it's like what's that? 5/1000th of a cent. 5 cent, 5 cents and 5/1000th of a cent is their 52-week low. And the 52-week high is $11.78. Right above that, you can see that. And so I have 1,405 shares of this stock right there. A little bit over 1,405.610537 shares at a market value of 147.12. It just moved 147.12. I'm sorry, 141.12. And the average cost is 31 cents a share for those 1,405 shares, basically. And I'm down negative 294. Today, turns I've lost negative 95.44. But it's at 30 cents a share, and its 52-week high is $11.78. So that's about all I'm going to invest in that stock right now. They'd have to turn around and what I would do is a stock like this, maybe they approach $32 and I sell off a lot of my shares, and then the remaining shares I would still be at that 31 cents average value cost that I paid. But a day like today, when you look on your Robinhood and it says you're down, like today I'm down $1,501.57 after the market, after hours, after the market has closed, I'm up $3.80. Whoop de doo. But the big story is I'm down $1,501 today. Now the thing is, and some people look at that as a negative. No, that's buying time. Is what that is. That's time. If you have, uh, if you have extra cash or extra money that you're able to invest, that's investing time. Because now everything that I have is probably at its absolute low, or it's 52-week low. That's what's going on. Everything there is at its 52-week low. And so it's not time to panic. What it is time to do is look. You would want to look through your stock list, which I'm looking through my list right here, which I'm investing in over, say, 750 to 1,000 companies easy on this list right here. I mean, that list goes on and on and on and on forever right there. It just keeps going. 750 to 1,000 companies. And I'll explain, and I'm going to get deeper and further and involve, explaining why you would have this many companies on your list. Is number one, you have to have this many companies that you've studied and or invested in and plan on investing in. Is because when you make a capital gain sale, like you have that one stock, like say this stock right here, I'm up 230, even though I'm down $133 today. It says I'm down $133 today, 134 basically, 133.98. I'm still up $230. I could sell it off and pocket the $230 right now. I'm not going to do that because it has a 52-week high of 24.72, and I'm up $230 right now on this one specific stock, and I'm still down 133.98 for today. So I was up 266 on this stock yesterday. I'm sorry, 366. But it has a 52-week high of 24.72. And right now its current price is $2.16, as you can see right there at the top, $2.16. I bought into this stock. My average cost of this stock was $1.20 a share. And I have 239 shares of this stock right there. You can see 239 shares of $1.20. And that gives me a profit of 230, even though I'm still down 133 from yesterday. But like I said, if you scroll down here and you look at the 52-week high, 24.72. And then underneath it, you see the 52-week low of 33 cents. You're always trying to, when you're trading stocks, you're always trying to get down to that 52-week low price. And that 52-week low is 33 cents. My buy-in of this particular stock was $1.20. I'm about 4 times as high as I want to be. So this is a stock that I believe in because it shows me that it can perform at the level that I'd like a return on my investment. And so what I will do is I will continue to monitor this stock. I will sell off capital gains, as they approach a level that I deem is a good sale. I don't think it's anywhere near its potential. If I'm already up $230.39 right here, and the stock is only $2.16, I'm only up like 94 cents a share. It's nowhere near where I want to sell off. I'm gonna probably wait. Now I got an alert set right here to let me know when this stock should approach $23.25. I have another alert let me know when it hits below 30 cents. This is a major money stock right here. It's a cash earner. And so what I will do is I will sit here and wait till this stock approaches somewhere around 23.25. The notification I set above that. I want to be notified by Robinhood when this stock approaches over 23.25. That means 23.26, I'll get a notification. And then I can decide if I want to sell from there. And that 23.25 notification that I have set up is $1.50 cheaper than the last recorded 52-week high, because the last recorded 52-week high is 24.72. So I want to get notified when its stock approaches $23.25, which is $1.50 lower than its 52-week high. So that way I have $1.50. I have $1.50 notice sent to me, a notification before it hits that absolute 52-week high. Should it hit that absolute 52-week high, I get the notification when it's in range of that, so I can make a decision from there if I want to sell off. And sometimes I might, because I might not believe that it will ever hit the 52-week high that it previously did in the previous year. So I might just decide 23.25 is good enough for me. I'm going to sell it off at that point. Remind you, right here, it says that I'm up $230 on this one particular stock. And like I said, the buy-in I have is $1.20. And I'm down 133 from yesterday, so I'm not going to sell this stock off. There's no way I'm going to sell this stock off right now. I wouldn't sell this stock off right now for less than, say, $15 a share, because the previous recorded year's 52-week high was $24 a share. So I would, and I own 239 shares of this stock. So I would like to see what $15 a share, and my buy-in is $1.20. I would be profiting about $13.80 a share multiplied by 239 shares. Now, if we were to look on the calculator, and we multiply $13.80 times 239, that would bring me, if I just sold this off at $15 a share, that would be a $3,298.20 profit at $15 a share. And $15 would still be $9.72 lower than last year's previously recorded $24.72 a share. So in trading, you have to always look and see, where are you comfortable selling off a stock? If it hasn't been performing well, you might just want to get your money out of it. If this was a stock that hadn't particularly been performing well, and those stocks I would keep at the top of my list right here, I would keep those stocks because I want to monitor those every time I log in to see if I can get my money back out at some point. Rite Aid in particular. Joann Fabrics in particular. Joann Fabrics is a stock that hasn't been performing well. I'm down, even though I'm positive 1860 on Joann Fabrics, and I own 470 shares of Joann Fabrics. I'm still negative 145.25 on Joann Fabrics today. So this is one of the stocks that I have moved to the top of my list to monitor, because if it should approach my buy-in of 89 cents a share, basically, if it hit 90 cents a share, which would be like half a cent above, not even half a cent, like 0.15 cents, 0.15 cents above my buy-in, I might take and sell off like 370 shares and just keep 100 shares, because I got 470 shares invested in that. So I'm gonna be, like I said, I'm gonna be going through, making videos explaining day-to-day stock trading, stock tips, stocks that are making money, how Robinhood works, and how you actually can achieve a capital gain in the stock market via Robinhood. I like Robinhood because Robinhood has tools in their application that help you to stay abreast of information that you need to know. So again, this is Xbox Live fame. My Xbox is Killer Kid. That's my Xbox ID. My YouTube channel is Killer Kid, and they added some numbers after that, but search Killer Kid and you'll find me. Just like and subscribe to the video, and stay tuned in, because I'm gonna slowly break down how to make money on Robinhood. Now, I don't mean like these guys make these videos and they're talking about how you can invite some friends from your contact list on your cell phone to join Robinhood, this Ponzi scheme and pyramid triangle stuff and all they do. I'm talking about actually making money in the stock market. If you want to learn, pay attention, like and subscribe. I'm going to break this down for you. Thanks. Have a good one. Hope to see you again.